Hello, it is Monday the 9th of December. Finally got my power back. Very happy. Managing trades on your phone is not always so much fun, and certainly not analysing charts. Hope everyone else is doing okay, because we are in a little bit of a shaky, choppy market. And there are a lot of people, I hear a lot of people who feel like so far in this bull run that they missed out, or they haven't made enough, or missed opportunities. And I feel like saying this month, if you're feeling like that, December is never a great month to make that back. And I really do feel like we're going to see much better trend and market direction in January. So might be up, might be down, but January tends to work like that, kind of out the gate. And December, it's feeling like we're just going to keep going with the trend we've got, and choppy sideways price action, particularly in Bitcoin. So in Bitcoin, as I said at the end of November, the market makers in the options market are likely to keep us in between 100,000 and 90,000, just because of the way they are positioned, and because we had such a massive rally in Bitcoin, and so far that's playing out. It's also quite choppy, and so it's quite easy for people on the downswings to go, oh my god, the world is ending, and what shall I do, and is it over? There certainly isn't any indication that this bullish trend in Bitcoin is over. It really is sideways correction at the moment, but at times like this, you kind of need to pay yourself, and you need to buy it back when it pulls back. That's what I think. Unless you're, a hodler forever, in which case look away, you don't care. But just be prepared that this month is likely to be a little bit choppy. Now, let's take a look at this big rally that we had that broke us through 100,000 that everyone was talking about. Because, clearly we've been in a really strong uptrend in Bitcoin. And one thing that marks that is really clear 5 waves, And if this was kind of the final swing, we would see 5 waves here. But what we've seen, in corrections, they're normally 3 waves. So in an uptrend, you'll make 3-wave correction and you'll carry on. And sometimes they can get a little bit sideways and it'll look like actually made a higher high, but you haven't. And then you'll do it like that and carry on. And I feel like, and they call that a flat correction, I feel like that's kind of what we're doing here. And the reason I feel like that is this swing here that we made is 3 waves like this. Okay, and if we measure it from the low here, like this, look at it on the daily, you can see that we couldn't close above that equal measured move level. It was 102.07. I said I said on the weekend, if we went back and back tested it, that 101,500, that back test might be resistance, and that's indeed how it played out. So this is a corrective move, and one of the rules about that is if you drop back underneath the 61.8 level on a back test, this run is over and we're in a bigger swing. So now we can say, right, this was the high, this was our first swing of correction here. Now we've done a 3-wave in the middle, and now we're going to do another swing with a mathematical relationship to this first swing. That's kind of how I look at it anyway. Now, one thing about when you make these flat corrections, so let's draw it again. So you rally and you do this, and then you make a high, kind of higher high, but it's just, you get everyone tripped up on the top side, and then you make a new low and you get everybody tripped up on the bottom side and think the world is ending. And I kind of feel like that is what we might do here. And we might come back down to this 90,000 level, and we might even make a little bit of a new low. But there is really good support here, and there are buyers here, and we can see that from when we've been here before. Oh my goodness, these text messages. I don't know, if you keep chickens in the UK, you have to register them. And now literally they send you daily text messages. It drives me insane. Anyway, I'll shut up. Stop complaining. So I feel like, yes, we are going to see a bigger dip, and we are going to be a bit choppy sideways. Now, markets have 3 directions, up, down and sideways. We're in a sideways phase, I think, into year end. Doesn't mean that we are setting up a big reversal, but you should prepare for some sideways. And I don't think if you know, unless you're a hodler forever, I don't think it's a bad idea to pay yourself. So that's how I feel where we are with Bitcoin now. If I measure from here like this, just going to mark the levels that I'm looking at. Yeah, I think 90,900 kind of is where it's all lining up for me. Maybe this low here at 93,500, but 90,900. Now 95,800 is where the daily 20 moving averages. Close underneath that wouldn't be the end of the world, but there might be some pretty good support there. And if we look at it on the daily, that would be, say, for me, that's the first support level, 95,850, and then I think back down to 93,000, but more likely, you know, in this sideways range, and we could make a new low and scare everybody, but it's just a correction at the moment till it turns into something bigger. Now back underneath 83,000, back underneath that daily 50 moving average, I could think, you know, we could talk about having a bigger pullback, but for now, you know, you can see we're just trading sideways in a really nice strong uptrend at the moment. And protect yourself or prepare perhaps for a bigger pullback, but don't count on it. It could just be sideways chop. Now in ETH, we were looking at, let's go to the daily or the weekly or chart here. So I'll start with the ETH dollar. We had these previous highs from March, the start of this year, and this big 786 fib retrace level from the high that we made in 2021 to the low that we made in 2022. I like this because all of the other fib levels really worked well in ETH. And so here's the rule: if we reverse here and we see a bigger pullback in ETH, the 60 back testing this 61.8 fib level at 3,334 should be the support. If we go underneath that, we're in a much bigger corrective pattern, and, you know, double top back to the lows, unfortunately down to 2,400. So, you know, that's kind of a really clear bull bear line for me in ETH. Now we might not come back that far. We might just be, you know, trading sideways back to the previous swing low, back to the daily 20 moving average, maybe back to the 3,500 in the lows that we made at the end of November. That wouldn't be weird, but definitely closing and holding underneath 3,344 in ETH dollar points to double top action and back to the bottom of this sideways range in ETH. Now, I don't want you to sell everything and go, oh my God, it's all over. You know, we might go sideways here. We might just pull back in a nice little hourly 3-wave correction, hold these out. We could, you know, right where we are now is this hourly 200 moving average. This is kind of the king of the hourly chart. You know, we could bounce back up here. If we hold back above that, we are on our way up again. Quite often Monday early in the week price action can be a little bit of a shakeout, but given the big level, given the big previous highs, I think that there is a risk, you know, in terms of the daily candlestick pattern here, I think there is a risk of a bigger pullback to 3,500 and potentially 3,344 in ETH. Let's take a look at Solana. Now, Solana, of course, is also a double top on the weekly, much bigger time frame back with the 2021 highs. We haven't got, because we've got these fib pattern here, I'm only looking at these fib retrace levels, and I'm going to say we're going to see, you know, this is 5 waves up here from the lows that we made in December 2022, and it's not clear to me that this is 5 waves complete in this sequence that we're doing here. And so if this is just a wave 4 and we've got another breakout level to come, which I think wouldn't be weird at all, we're in a really strong uptrend in Solana. The key level I'm looking for support is at 204. Now, when I'm drawing fib retrace levels, There's a couple of ways I do it. So this is literally the most recent spike swing. So if we go on this one, if we lose the 236 fib on this, I'm generally thinking, 38.2 or 50%. So we're sitting on this 38.2. 50% is a bit lower. But if I take this whole swing, you can see that we're trading underneath the 236 fib from this whole swing. And let's look at it on the daily, because you can see that we kind of reacted to this fib level pretty nicely. So this level now becomes resistance at 228, and the next support comes in for me at this swing low, this next fib level, and the highs from 2024 at 205. So unless Solana recovers 228, I think that we continue lower in this pullback to 205 area. And that should, first time back to that level should be really, really good support the first time back to it. So that's what I'm looking for. 50% of this whole swing, if we lose 205, is 187 next. So again, sideways, it's just a correction. All of these were just corrections. It's not never going up again or any. Some things that people are telling me, people are saying they didn't make enough money and this it's all over forever. Honestly, I don't think we know that, and we've got a really, really pro crypto administration coming in the United States, so I would be astonished if that's the case. But there are some things coming though that make me nervous. So like this week we've got inflation data, and next week we've got the Fed. Honestly, I think with everything that's going on in the world, they could not be less relevant. I do start to see signs though of cracks, certainly in the UK and in the US as well, in the jobs market. So for me, the thing that if the other markets are going to blow up and collapse, because at the moment, stock indexes, especially in the United States, are, just on a rocket higher, and the pullbacks are really shallow. I think if we're going to see a problem, I think it's going to be the jobs data, which the next one is on the 3rd of January. So I've got the 3rd of January as a kind of lookout day, really. I think that's when we'll find out if the jobs market really is as healthy as people think it is. So I'm really hoping that this is going to be one of those scenarios where the crypto market really does its own thing and isn't dragged down. So those are the levels that I am looking at in Solana. Let's look at a couple. Ripple, which has been a really fun trade, is also in a little bit of a bigger pullback and a lower high. Now if I go to the weekly of this one, I had a few levels marked out, and each one, when you get above it, it becomes you look for it to be support if you're going to keep going higher. So for me, this we've reversed just like ETH at a big 786 fib retrace level. Also this one is from the 2018 highs to the lows that we made in 2020. When you do that, unless you're going to do the bigger corrective pattern, you don't want to close underneath the 61.8. So we've reversed at the 786 fib. The key support then is 2.09, because if we do reverse and drop underneath, then we would have a bigger short back down to this 38.2. So between 2.13 and 2.11 and 2.09, really, there's the support zone in Ripple. And I'd like to see us back there in 3 waves. Now, it looks like if we measure the swings, we're likely to dip underneath that in Ripple. That's okay. I just on the weekly would like to see us close and hold back above that level. So 209 kind of is the bottom of that support zone that I am looking back in Ripple. Now, if I measure from high to low like this, we could get on. Gosh, we could go down to 1.91, and Ripple likes to do that when it moves. If we look at the moves we had previously, it would really spike and overshoot on the upside and on the downside. So if you were looking for the really outlier level, 1.91 wouldn't be a terrible place to put a little order and see if we can bounce from there. So that's what I'm looking at in Ripple. But for the rest of the altcoin market, I think we're due a little bit of a pullback. And the reason is this total 3 chart. Let's get to the monthly on this one. And we've reached kind of one of those fib projection levels. So if I mark my fibs from this high to low, this was a very nice 886 back to the 50%. We got above this level, 1272. And if we look at this on the weekly, we've got our first weekly red candle, basically, since the end of October and Trump was elected. So pretty much every other market had a little bit of pullback, and this one hasn't. So, and quite often you can get quite big pullbacks in this market. Now, we could argue that this was 5 rows up and we might come back all the way back to these swing lows. I don't think that that's going to happen, and I'm not necessarily sure that this sequence from the election low or from the August low even is complete. I think we could very easily just go sideways in a wave 4 and see another leg higher here in this chart, and 4.4 next. We're at 3.6 and 4.4. So at the moment, this is just the first weekly correction in 6 weeks of up only, and really not enough to panic. But as I said 2 weeks ago, this is really kind of a time to protect yourself against downside risks. Now, some markets don't care kind of what's going on in the bigger crypto market. If you're in a micro cap Solana shitcoin, it's going to do its own thing. I was looking at this weekend at some pretty decent moves in the bigger meme coins to see if they were going to start the way of a bigger move, and one of them was Pepe. So Pepe on Saturday had a really nice breakout move above this resistance at 22.45. We had a first target of 2700 and then 32.77 if we could break above it. I wouldn't be surprised at all. This was a very nice 3-wave correction. If this is a 1, 2, 3, we're going to go sideways in a 4, and we see another leg higher in Pepe to 32.77. So Pepe is one of the ones that I'm still holding on to at the moment. I'm not sure this is done. This is kind of just a pause in a really nice uptrend, and yeah, if it keeps going, this might be good for other smaller meme coins. If we take a look at where we are with Doge, remember we were trading through the big fib levels. For me, we haven't really hit the measured move target in Doge yet. That's higher up here at 0.51, between 0.48 and 0.51, and which says to me that from this low here in August, we've kind of done a 1, 2, 3, and we've got a wave 4 and another leg higher to go, even to hit that minimum target. I wouldn't be surprised if Doge, makes new highs. So we're in sideways and a little bit of a choppy, nasty correction, and a wave 4 with really nasty overlapping. Maybe this may be a choppy overlapping wave 5, I'm not sure. But this is very nasty price action where you make a marginal new high, deep pullback, marginal new high, deep pullback. If we lean on the fib levels, this 50% level at 0.404 in Doge was initially resistance. We chopped through it, then it became support for a new high. And so I'm looking for this as kind of support, but we could, as we wash back and forward through this level, really come back to the, we could argue this is almost a little bit of a double top here. And so just like Bitcoin in this choppy, overlapping, nasty sideways range, we could very easily in Doge come back to the bottom of this sideways range. And does it mean that the party's over? No, it's not. It's just, a nasty sideways range, unfortunately. We might just come back to these lows. It is just corrective. Kind of went very, very far, very fast in this one, and I really do think the start of January should give us some I think I wouldn't be surprised if this chops into year end. We might though get a pretty nice Santa rally in other markets. The problem is that the positioning in Bitcoin, if we look at the calendar and when the options expire in Bitcoin that's not until Friday the 27th of December. So I think if we're going to get a Santa rally year end in Bitcoin, we need to get through that expiration, which would mean 28th, 29th, 30th, 31st in Bitcoin, if we are going to see a year end kind of breakout Santa rally. We just need to get through Friday the 27th. That's what I'm looking at. So Pepe and Doge, little bit toppy. I'm holding on to Pepe unless it turns into a bigger reversal. For now, there are a couple of others that we're looking, WIF was looking like a nice bigger reversal breakout. Unfortunately, with this big spike on the upside, we came all the way up to retest the highs from March in this. And when you measure the swings and the closing prices on the weekly, unfortunately, this is looking a little bit like a big three-wave correction in WIF, which is a bit disappointing. And so this was the move that we tried over the weekend. I was looking to see if we could break out of this level, and we tried and then rolled over. So not happening in this one, unfortunately. So I've cut this one, although I'm still holding Pepe. And another one that I was trading was SHIB. Let's see where. Here we go. On the weekly, I thought that this one was a really good candidate for a big kind of catch-up trade. If I put my fib retrace levels from the March high to the low in August, we have not even got back to those March highs. And one thing we have been doing in SHIB very nicely is climbing each of the fib retrace levels from this high to low. We've reversed at the 61.8, unfortunately. So 28.23, the back testing this 50% in the middle is key support. If we break underneath 28.23, we're going to come back to this swing low, and it will be kind of a 5-wave back. This will be 5 waves up and back to this swing low here at 24.11. So I have been trading this one. I will get out on a bounce if it closes underneath 28.23, and this one will be done. It won't be the catch up that I was hoping for. I think that we could see a bigger pullback in this one as well, unfortunately. Okay, so I need to say, just trade carefully this month. If you've made money, pay yourself some and protect yourself against downside risks. I think this month is going to be choppy, but better opportunities are coming. Yeah, don't give it all back in the chop.